Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again on the gold market. So, situation on the gold market stands difficult because market is driven by external driving factors. You know, this coronavirus panic, and because the normal factors that we discussed previously haven't changed, on the gold market, indeed, the long-term bullish trend exists, but it's mostly driven not by the coronavirus, but by some fundamental economical factors, and these factors are still stands in place. And in a shorter-term perspective, indeed, market stands too overextended to the upside. The net positions are too strong, it's highly saturated, and that, by the common sense, should lead to some relief on the gold. But at the same time, the drama around the current situation stands so that the driving factor, which is the virus panic, can't tell you when this will happen. So you can't control it. You can't analyze the possible moment where this relief will happen, because you just can't foresee it. But analysis of any kind, you can't make just analysis of the charts and say, well, coronavirus factor will exhaust at this point and the retracement will start. You can't do this, and that makes it difficult to foresee when the market will return right back down on its own road and will be driven by the normal factors that we are in habit to foresee and in habit to plan. Currently, that makes overall situation difficult. But in the shorter term, we could say that technical factors, technical signs that we see on the daily chart creates the bullish background for the gold market. And the tricky moment stands so that, guys, if you remember just a few weeks ago when we saw this type of action here, we were speaking about, well, really humble on perspective of this upward action. We said, well, it seems that maybe gold will not reach the 618 level, but it should show some minor upside pullback just because this momentum is strong and some real action could start and should start. At this point, we just can't foresee that some coronavirus will start to act and it will be panic on the market, will push prices higher and so on. But despite what the factors was, the fundamental rules of the momentum on the market works anyway, always. Although maybe in this point you can't foresee what particular factors will drive the market. Now it's approximately the same story, guys. What we have on this upward action, market hasn't stopped right at our minimum targets, 1582, but take a look what we have. Market has raised the grabbers, although it was, again, on the background of the panic. It's another wave of panic that was on the Friday. And take a look, market has closed above the top of the grabber. It means that the grabber has been erased. Market has broken through the major resistance, and we have the signs of the bearish dynamic pressure on the market. Trend stands bearish, but price action is not, it's climbing higher. What does it mean? On the next week, guys, the hour bond on the weekly chart will stand at the 1625 area. And it means that market first easily could reach this level and trying to test the previous tops, because those of you who are following our updates and our analysis should remember that when the market has failed to break this range, which is actually in the weekly chart is a huge doji, we said, well, that is the fake breakout. It means that market will climb higher and easily could move inside of the range. But as test of the lower border already has happened and has failed, next in turn should be the test of the upper border. Whether this will fail or not, we will see, but probably it should happen. That is the, let's call it, average forecast, average probability. Ultimate scenario is possible action right to the 1655, which is the monthly major XOP target, because we do not know what the news will be on the coronavirus again. So it's two targets that we have for a common week. First is the testing of the 16, even 1611, previous top. Second, which is ultimate target, is a possible rally right to the 1650. If this level will be broken, the market will break the range of this weekly doji pattern. So that's what we see on the common week is possible. Because currently with this breaking of this area, we see the breaking of the potential bearish scenario. We see our market is turning to the bullish side. On the 4-hour time frame chart, we have following picture. First, we have the extension, this ABC bottom XOP, which stands 16 even. And also, guys, it agrees with the butterfly target, which is also 16 even target. And the trading plan here is twofold. First scenario that you could follow is trying to take the position on the way to the XOP. This is mostly scalp trade. It's, you can see trading setup is not really of the big scale, and it suggests that taking position on the minor pullback while market is standing to the major target. It means that while it's going higher right to the target, it should not show any deep retracements. Some pullback here could happen, but it should not be too deep, because first of all, deep retracement already has happened. We now is an extension leg, and market should just continue upward action with just minor pullbacks here on the intraday chart. That could let us help to take the position with anticipation on reaching the XOP. The second scenario suggests reaction on the XOP target. When the market will hit XOP, then it's probably some greater pullback should happen, and you could consider possible taking the long position on the possible pullback from the XOP. That's a bit different story. It's a bigger stake scale, but they are not mutually exclusive. So you could follow as the first one or the second one. I'm just speaking about two of them because, well, tastes are different, and traders could like some different setups, and that's more comfortable to the psychologically for the trading. So that's why I'm speaking about different ways how you could try to trade. So if you decide to wait for XOP, well, you could do this and see what will happen after that. Those of you who would like to consider the first scenario, we could act as follows. So first of all, target we have estimated. Now let's see what is the validation point we have and where we could take the position. On the hourly chart, for that purpose, we need only the recent swing, because, as we said, retracement should not be deep. That's just this coming from the overall idea of the market mechanics and attending to the major target. So on the hourly chart, we could consider most recent upward action. And here we have two levels to consider. First one is 1585, first fifth support. Next one in conference, 1582, 1583. Personally, guys, I like more the first level, because market is not that ever bad. It's just has break the bearish context. It just has overcome through the major bearish patterns and levels. So with this upward action, market has raised as the grabber on the daily chart, as has broken through the major level. Here is also an intraday chart that has erased the strong bearish engulfing pattern. So it just overcome through the strong bearish factors, and from that standpoint, it should not show some really collapse like here. It could show just minor pullback. That's the reason why I think about the 1585. Invalidation point here will be 1580 lows, because if market will break them down, it will show and will form bearish reversal swing, will not match the overall idea tending to the XOP target. So it will be in opposite character, in opposite nature to idea of the overall setup that we have. And from that standpoint, this level is crucial. That's why here your potential loss will be approximately $5 per contract. Well, that's acceptable for the target. For this intraday setup, the target will be around 16 even. So, well, normal risk-reward ratio here that we could consider. That's what we will keep an eye on the common week and see what will happen further, because currently I do not see any reasons and think that's not a good idea trying to foresee and make some judgment and talk about perspective of the new impacts of the news by the virus news or something of that sort, because we just can't foresee it. We can't plan it. We just can't react. We just can't react on this, and that's all. And now I think that's more reasonable just to follow the price shape that we have and trying to extract some bonuses out from the context and the patterns that we have in the market right now.